Good morning, everyone.
Morning, evening, afternoon, and good night.
Well said. Well said. Okay.
Morning, everybody.
Hi, good morning. Morning, Abby.
Morning, Luca and everyone.
Hi, Archie. Just wait for Duncan to come on the call so I can. There he is. So I can give him. Host.
Morning, Luca and everyone.
Hi, Jaya. Okay. Hi, Duncan. I am making you co-host. Okay. That's it. That's done. I also sent you, Duncan. I sent you the link for YouTube on Messenger. Okay. Okay. Off I go. Okay, there's a lot going on today, and quite a lot I would like to talk to you about. But I'll try to keep it as short as I can. But there is quite a lot, I must say, and a lot of it is fairly fundamental as well. So it's important to mention. Let me start straight away. I'll start sharing my screen so I can show you what I am thinking about. Okay. So you don't want to look at my Facebook page. Okay. Let's start. The first thing I wanted to share with you is still, again, we're talking about the infrastructure bill. Okay. And at the moment it's going through the Senate in the US. And they're trying to kind of like lessen the damage done by this really badly designed bill. And because basically, I mean, for those of you that don't know it, you know, just they created this idea of a broker, and like everybody in crypto, everybody that does anything in crypto, you know, including developers, are being likened to a broker and being asked to provide the same sort of paperwork that a broker would do, you know, which is impossible for many both developers and also you know, mining operations, stakers, and especially decentralized protocols, you know, that don't store users' information. So they are now trying to repair this damage because they can see the damage they would do to the whole industry. And if you see this other article here, you know, 10 USA Congress member says current crypto tax rules can kill industry innovation. Now, at the moment, what is going on, and it is important for you to kind of like understand that we are almost into a battle for the future of money. Okay, and in a way, in kind of like the institutions that we have created almost taken more relevance than the scope they were created for in the first place. Okay, and this is something that is explained very well by an insider. Let me see if I can find. Yeah. So I don't know if any of you have ever listened to this guy, which is like Chris Giancarlo. This is him in a Forbes interview. Now he's better known in the industry as Crypto Dad. Okay, but he was also the chairman of the US Commodity Futures and Trading Commission. And he's probably the best person to explain exactly, you know, the kind of the power struggle between the scenes, between the nascent new industry and the kind of institutional power. Okay, and something that he was saying, he got a lot of pressure on him to stop Bitcoin futures being created. You know, and at the end of the day, most of us saying, you know, trying the kind of pressure they was receiving, it was kind of like, institutional pressure to almost decide if to allow or not allow this, because it will cause problems somewhere in the economy. It's kind of like the Commodity Futures and Trade Commissions was not established for that. That is down to the legislators to give Bitcoin or anything else legitimacy or not. And it's kind of like important to understand how this new idea of peer-to-peer transactional currency money is actually disturbing the established power of the financial industry. Okay, and at the same time, we got to see as well what's happening across the pond, in China, and what they are trying to do with cryptocurrency. And in a way, if you take a step back, it's not just cryptocurrency that we are talking about, but maybe the biggest innovation that these past 10 years, from 12 years from when Bitcoin first was thought of until now, probably the biggest change in our society that is stemmed from the cryptocurrency industry is the emergence of DAOs, which are decentralized autonomous organizations, because these are, in a way, it's a different way of regulating, a different way of managing different different types of organization, which could be your neighborhood association, or it can be a much bigger thing that at the moment is being done by the nation state. Now, I think for the first time, at least definitely in my lifetime, we actually now rediscussing what the role of the institutions are, and which way should we do things, because doesn't make, I mean, if obviously we are talking about money first, because this is what that's the first use of cryptocurrencies, but does it make sense to you that in a worldwide economy as we are now, where you can buy and sell anything online at any time of the day, 24/7, that it will still take a matter of days to move some money between your account in, let's say, the UK and an account in Australia or in another part of the world, when we can see online that there are things going on 24 hours a day. Now, you tell me why something cannot be done after 5 p.m., for example. What's the sense of that? Or why a transaction that started on a Friday will not go through until Tuesday or Wednesday because nothing happens at weekends? That doesn't really make sense. It doesn't really apply to the modern world. And so we've got to think about it. Some of the laws that regulate exchange of value, as I prefer calling it rather than money. And these are rules that were established, even before the war. So when the economy was slightly different from what it is now. So in a way, these kind of supporters of the establishment, their main argument is, well, things have always been done this way. But it is not a good a good argument to support why things should carry on being that way. And this is, I think, is very, very healthy to be able to have this conversation, this discussion, without having to go through a really disruptive event like a world war or something like this, because this seems to be the only time where people really sit around the table and think, of establishing like a peaceful organization that can govern the way that life is going to go on from now on. So this seems to be now going on. There is another outlet for this kind of discussion. And the interesting thing is that the newer generation that are not really ever shown too much interest in politics are getting very, very engaged into this discussion. And it's something that is actually now very talked about at any level, from the 18-year-olds and even before to, people of my age and now have been around for a while. Now, so we'll see what happens in Congress and in the Senate, but they are trying already to water down the provisions in the infrastructure bill that was voted in by the House of Representatives, and maybe to push it down from the application of it from 2024 to 2026, and to exclude certain players from having this need of reporting to the authorities. Okay, and just bringing you back to what we were just talking about 1 minute ago. You know, I was thinking about how the authorities have managed to take away from you with the idea of they're giving you something that it's useful, that you want to do, but at the same time, on the other side of the coin, they're taking something away from you. Like, in a way, yeah, they're giving you money that's easy to use, it's much easier than bartering things, but on the other side, they're taking control of it, so they can do what they want. They can create as much of it as you want, not you. That's the one thing. They're giving you, something that you like doing, like social media, for example, which is the modern version of kind of like gaming for the masses, but on the other side, they're taking away all your information. So, just think about it for the future. Do you want to live in a country that not only knows, what you are spending for everything you spend, because now cash is becoming less and less important, so most of the transactions are being done by in a digital way, and all these are recorded, and there are ways for authorities to know absolutely everything that you're doing. Do you want organization to know what your likes is, what your likes are, what you like doing and what you don't like doing, seeing all your photos, reading all your emails? Do you really want to live in an organization like this? Because this is not even George Orwell went as far as that, when we were talking about Big Brother. So just think about it very, very carefully, because this is kind of like the world that we are seeing now. It's already happened where organizations like Google, like Amazon, like Microsoft now have control of who can have a voice and who can't have a voice. And we've seen this in the US election where, many of Trump's supporters are being silenced unilaterally by unelected organizations, and these are private companies, by the way. And although I do not support Trump, I still support freedom of speech. As much as not to my liking it might be, I think everybody has a right to have their voice heard. And if you think this is a new thing, just think again. Now, if anybody knows what that means, that's a saying that's attributed to Juvenal, that's been repeated repeated from for centuries ever since. This is the beginning. Just after I think around 50 AD, and which means bread and circuses. So what you need to control the masses, they just keep them bread, keep them belly full, and keep them entertained. And as long as that's going on, you can govern, you can do whatever they want, you can do any degenerate thing you like, as long as the masses are kept happy. And we've seen this. I mean, I don't need to go back into all the ways that we've seen in the US elections, in Brexit referendum. This is going on already for many years. But what I think, what I'm wanting to bring to your attention, just look at it, just remember this, because this is what's going on. All the time you get a diverting your attention from what's important to what's entertaining, so you don't pay attention to what really is going on behind the scenes, and are they trying to control you and what you do. And if you don't believe what you're saying, just say, I don't know, just read this and tell me what you think. This is India's Prime Minister. Crypto can land in the wrong hands if it's not regulated. Just think about it for a second. Think about it, what's really saying behind the scenes. I mean, can you tell me what wrong hands mean to you? And this is quite big. in the sense that who has a right to have control of resources, to have control of value, to have control of finances? Are there any right hands? Because obviously, if they're wrong hands, it means that there are some really good, some really virtuous people that should keep control of the way that we transact with each other. Okay, and that just kind of like it made me chuckle when I read that this morning, but it also made me worry, because I'm thinking these people really believe that, really believe that they got almost like a divine right of basically governing our life whichever way they see fit. And this is kind of like we move from giving the power to kind of like king and queens, to giving the power to governments and corporations. But really, it hasn't really changed much in the past few hundred years. There is still somebody that is in that position of lording over us and deciding the way that things should be done, and we just sit there and accept it. Well, now there is an alternative. We are thinking of or doing things slightly different. It may happen, it might not, but it's important to have that discussion. On different subjects, kind of like I'm trying to move on quickly because I've already spoken 15 minutes and I don't want to keep this for any longer than about maximum half an hour. This is more adoption in the US. This is what it's interesting, because this Bitcoin ATM has been set up in the airport in this North Dakota's Williston, city of Williston, by the city itself. So it was by the council rather than from a private organization. So it's interesting, it's quite funny to see the list of supported coins includes Bitcoin, Ethereum, Dogecoin, and Shiba Inu. It's kind of quite funny to see how something get quickly adopted and become the norm. Okay, so that's just a very, very short. And the other thing that's really interesting is this is the first time we have an embassy in the metaverse. And Barbados has launched, it's the first country that has launched an embassy in the metaverse. And they actually bought some land in Decentraland, and they actually employed architects to design and build the metaverse embassy. And also they're looking at the legal process as well, because this is, after all, it's a government organization. So they're looking at this from every angle they can. But this is, again, as we had El Salvador from one side with the being the first to adopt Bitcoin as legal tender. Now we have the first official embassy in the metaverse, and I think this is probably just going to be the first of many, because why not be able to now provide some of the services directly through not just online, but through a metaverse setup where there is a lot more direct interaction, but using both the internet and blockchain well to make transactions transparent and also recorded immediately in the blockchain. On a where am I saying? Okay, we pass on that for now. Going on to Polkadot right now. We've been talking about Polkadot for a while. Now this is Gavin Wood, which is the founder of Polkadot, and also one of the original founders of Ethereum, and is the developer that actually created the smart contract language Solidity that Ethereum uses to program smart contracts. So he knows a thing or two about Ethereum as well. And it is talking in this interview about how Ethereum is actually closer to Bitcoin than many would like to think, and how Polkadot approach actually changes from that of Ethereum to a more open approach that includes many other blockchains in their approach. and also the part of the problem that the Ethereum miners are causing, and the fundamental problem that there is with the actual design of the Ethereum blockchain in the first place. And this is, in a way, it's funny that the two most interesting solutions that have been coming from the market, recently, are actually two of the original founders of Ethereum, because both Gavin Wood and Charles Hoskinson, which is at the head of Cardano, have actually come from the original founders of the Ethereum project. Okay, but they have looked at what was going on in Ethereum, and they didn't like the way it was developing, so they went to develop a separate solution. Now, this is something that I wanted to show you, because I know that many of you also still look at, a price. You look at something like this, kind of like Bitcoin. It goes up and it goes down, and then you look at a graph. Something like this, thinking, oh my God, kind of like, let's better run for the hills, because it's not a very, very healthy graph to look at. Yeah, do you agree? Do you agree with that? You're seeing the price seems to be going down quite dramatically. But then, if we just like change what we're looking at, and we move back a little bit, then I think this is much better chart, isn't it? Much more interesting. And this is where we are right now. I mean, it wouldn't say, if you were looking at the chart, it wouldn't be too bad. If you invested in this, you wouldn't be too worried about it, especially if you bought somewhere around here. Okay, and this is obviously the Bitcoin long-term chart, the weekly chart, and what I was looking before is a short-term chart. Sorry. Okay, so yes, this is a big drop, but at the same time, there has been, it's been going up for quite a while, so it's just completely normal, completely natural. And what I wanted to show you as well, the reason why, I mean, these things don't go up in a straight line. Okay, so they go up, they go down. It's normal in these markets, and in a new technology market, it's normal to see big drops like this of 50% or more. It's quite to be expected. Also, what you see is that once prices start going up very high like this, often they're pushed by leveraging, because one thing that we have seen in Bitcoin is that the level of Bitcoin on exchanges is at the lowest it's ever been. So there are not many of these things to be traded. So the price is basically made by people that are willing to trade it. And these are kind of like short-term traders. And the short-term traders, what they do leverage their positions. And basically, they make big leverage bets in one direction or another. And especially here, there was a lot of leveraging, just betting for the price to move up and to go above this. And when it starts, going down, what tends to happen? Maybe I can show you in a smaller time frame. What tends to happen when you see something like this, especially once it breaks important resistance like the 60,000 level, or in this case it goes through a particular moving average, you get the stops that are getting triggered, and those stops either get triggered or traders that are leveraged get their position liquidated because they don't have enough money in their account to keep that trade going, and so everything they have gets sold to clear their exposure. Okay, and what it translates into, for example, in this case, like the price is going up, and these accounts get liquidated, basically translates in the market with more sales. Okay, so that's how you see this acceleration of the movement on the way down, until basically it's a way for the market to shake out all the leveraging. Okay, and once that is cleared, then the market starts the normal activity again, be more fundamentally driven rather than being driven by short-term trades. Okay, and the other thing I wanted to mention about Polkadot is that the results of the first auction actually were announced last night, and Akala was the first winner of the Polkadot auction. Akala is basically, when you can read about it in your own time, is designed to be the DeFi hub of Polkadot. And the way that the parachains work is, now, if you are supported Akala in the parachain auctions, now your Polkadot will be bonded for the duration of this parachain, which will be just about 2 years, and during that time, then you will not receive Polkadot staking rewards, but you will receive tokens in this for Akala, and then you can actually sell these tokens if you want, or you can stake them. You can do whatever you do with this, with these Akala tokens. So, but it's very interesting to see the kind of interest that there has been behind this auction. This is 32 million Polkadot. These are $1.2 billion. They have been bonded through this auction. So it's a pretty big thing. And just to make you understand how big these projects are, already Polkadot's DeFi platform Akala integrate by e-commerce major project Venkman. I mean, this is talking about a project that's got 10 million users. Okay. So the Chive, a roaring online community of 10 million monthly users, is set to debut its branded loyalty and NFT platform on Akala. Okay. And this is just, again, it's not even Polkadot. This is just a parachain on Polkadot, and there's going to be many of these parachains. Each one on its own right is a big project. Okay. And when I say, I've been, if you've been coming to this room, you would have heard me talking about Polkadot pretty much every week, together and Cardano. Just thinking, why do I do that? Especially when you were looking at the prices not doing anything for months. And this is why I'm doing it. Let me show you this. This is what I would like you to look at, guys, and to look at data. Stop looking at charts and start looking at this stuff. Okay. This is Cardano's price hasn't done everything for months. It hasn't moved. Well, look at what's going on the blockchain. Okay, Cardano is about double the size in transaction value than Ethereum. Okay, and it would this is on the 15th of November, a few days ago, was only a little bit behind Bitcoin. So, you're thinking, is it a good time to get involved in Cardano, do you think, or not? Just before the apps are starting to be released on the blockchain. This is even without all the apps. Look at where it is, doing double what Ethereum is doing. Okay, and this is maybe things that you haven't, Litecoin. Litecoin is another chain that is used for payments online. Bitcoin Cash is a little bit of a, again, is useful. It's one of those things that is accepted for payments, although it's used a lot for trading. It seems to be one of the possibly the major use. And if you look at, I just looked at one this morning. Actually, Polkadot actually has gone up and taken about 5th position now, and Bitcoin Cash has gone down, and Litecoin has gone down in value. But this is the activity on chain. So this is data that is not opinion based. These are facts. Okay, these are transactions that are being put through the system, through the blockchain. Okay, so this is why I'm talking about Cardano. I'm talking about Polkadot, because these are the projects that are doing real work, are delivering real solution to problems that are out there, and people want to use them. Okay, this is how I judge my investment, not by what's going on the price chart. Okay, back now. So where were we? Let me see what else is there. It's important. So another thing, and again, this is going on in a lot of major blockchains. Binance Smart Chains has record after, the record of 14.7 million transactions in one. I'm just saying, not particular about Binance, just saying in any blockchain, we're seeing an increase in the number of transactions, but there is so much demand now. Really, this is starting to go mainstream now. And so there is so much demand for block space, which is, anybody wants to be on the blockchain, whatever that means, whatever blockchain they need to use, they want some space, whether it's Binance, whether it's Algorand, whether it's Phantom or Avalanche or whatever, they want to be on the blockchain. Okay, so see, these kind of records are being almost like beaten on a weekly basis. On a more practical level, for those of you that are interested and use MetaMask, there is rumor, and I know I've spoken about this before, that MetaMask could launch their own token. Okay, and if that happens, it would be probably an airdrop. That means giving free tokens to users. And so there has been an increase in use of MetaMask simply because people know that this may happen. So they, when these things happen, I mean, if you don't have a MetaMask account, go and open one now. Even if you don't have any money in it or whatever, just open one now, just in case. But generally, what happens with airdrops? They take a photo of a picture of the activity at a certain point in time, and sometimes, you know, this may already be too late because that kind of a snapshot might have been taken months ago, and they will reward people that were using MetaMask a few months ago. But just in case, go and get your. It's a free download. You can do it quite, you know, 5 minutes. Just have one. Just download one, because just in case you get some free tokens, that could mean a lot of money as well. If you listen to what happened to the Ethereum name servers, people that got an Ethereum website address, domain were airdropped with a drop that was worth several thousand dollars. Okay. At the same time, when there is all this positive activity that we're talking about, there is also something to be a cautionary note. Okay, because there are so many fraudulent schemes going on at the moment that you have to be very, very, very careful about getting involved in anything online, because apart from very good work that is going on in the background, there is also a lot of scams that will try and part you with, you know, from your cryptocurrencies. Okay, and often what may look too good to be true, it is too good to be true. Okay, so be very careful what you see, especially if it is not on a central exchange. If it is on a decentralized market and it is a new project, be very, very careful with new projects. Okay, it can be good, yes, it can be very positive. You can make money, but you can also lose money. So be careful if you do decide to go that way on how you approach it and how you get involved, because you could end up burnt. Okay, and possibly I wouldn't want you to do that if I can avoid it. Okay, so we're going past the half an hour, so I think I've spoken about quite a few things, quite a few subjects. It'd be interesting to know if you have questions, or if I have completely, you know, bombarded you with things and you have a blank stare on your face. Okay, Duncan, do you have any questions ready?
You see, I have questions, but I know what you mean. I was hoping there might be something in the chat. So it's like after about 28 minutes past, I suspect, and I think it's been up and after questions.
I can hear you very well, Duncan.
I'm really sorry. I think it's because my Wi-Fi is so weak. Turn my camera back. There's no questions in the chat at the moment. Anybody would like to speak up, unmute themselves? Any questions out there? I downloaded a fake sushi swap app last week, and I wanted it because I was looking at some coins. I didn't buy anything, and then a few days later, I got an alert saying this is a fake app. Do you want to delete it? And I looked at it, and I had it wasn't the real one, and you know, it looked like the real one to me, and it was just dead easy to do. So, has anybody else done that?
Yeah, especially be very careful with stuff that it's advertised, you know, because there are many sites that advertise, you know, things that sounds like the real thing, and then you download malicious apps that can do stuff on your computer and give people access to your funds.
Last question from Jaya.
Sanjaya, Polkadot, some projects are live. Do you have any insight timescale for Cardano projects? Yes, I mean, Cardano, they are testing what is called the Bluetooth application backend, which is the last bit of code that is needed for decentralized apps to release on the blockchain. Okay, and it's at the moment it's being tested on the testnet, so is rumored to go live sometime this month. I mean, this is what was announced sometime in November. Okay, so as soon as it is, the apps basically are ready. There's, they've done a lot of work, and a lot of them are ready to go, and some of them already done launches. And what they launch as an Ethereum token rather as a Cardano token, and then we'll move once it's possible. They will move to the Cardano blockchain. Carol, can Luca go through the steps to get involved in ADA projects again? Okay, it's like with any projects. You can simply buy the tokens when they're released, and all these tokens have got kind of like what they called IDOs, initial domain offerings, some of them, or some projects. This is project specific. Okay, so it depends on the project. Some of them will do what is called a fair launch. So instead of getting VCs involved and give advantage to early stage investors, they will make the tokens available through a what is called a initial stake pool offering. So basically, what they are doing in Cardano, how you get your rewards is by delegating your coins, the voting rights to your coins to a stake pool. Okay, and in return for that, you get some ADA coins, which at the moment is around between 5 and 6% a year. Okay, so what a lot of new projects are doing are launching their own stake pools. So they're saying, instead of buying these tokens, you just delegate your coins to a stake pool, and instead of receiving Cardano as a reward, you receive these new tokens as a reward. Okay, and so it's a similar thing to what Polkadot is doing with the parachains. Okay. So the only cost to you would be not receiving the Cardano as a reward, but instead receiving these new tokens. That's the only. It's an opportunity cost more than anything, but you wouldn't need to part with any money. So this is the process. The process will be, first of all, you'll need to download a Daedalus wallet, which is a Cardano wallet, or a Yoroi wallet. The Daedalus is the full wallet that you need a computer for, and the Yoroi is a lighter version that you can have on your computer or you can have on your phone. Okay, so you will need one of those wallets. Then you need to transfer your coins from, if you have them on a centralized exchange like Binance or Kraken or KuCoin or whatever, transfer them onto your Daedalus or Yoroi wallet. And once you have them on there, you can then go on to staking. Delegating is called in Cardano, and then choose. There are thousands of stake pools. Choose the stake pool that's being organized by the project that you want to support, and that's doing the ISPO. Okay, so that's the thing. Once you've done it, then that's it. You've delegated your coins, and it's a very simple process. And then you just wait. You just wait for the length of the process, because this process may last a few weeks, or it may last a few months. So in the case of MELD, it's been going on for a while already, and the process lasted about 6 months. In other, the other big one is Sunday Swap, that is going to go live sometime soon, and that is supposed to go on for about 5 weeks. So depending on the project, possibly you might be able to support with the same coins several different projects that launch at different times. So you might end up with one lot of ADA, and then one lot of, I don't know, Sunday Swap, one lot of, I don't know, Liquid, or another app or whatever. because they are launching their ISPO at different times. So that's really a good time to have Cardano at the moment, and a good time to get rewarded for being a holder of Cardano. Sorry, in Daedalus wallet, do you need a separate wallet folder for each separate stake pool? No, basically it's like each stake pool is just like a different place where you can delegate your ADA. So you might delegate your ADA to just one pool, or you might delegate it to several pools. It's up to you. You don't need different wallets. You just need. So in one place, it's like if you say you have a bank account, and you say, okay, I'll put some money into my savings account. I'll put some of this money I'm buying, another saving product that the bank is offering. So you might kind of put your money in different jars, so to speak, but it's still, your money is still in one place. It's still in your wallet. It never leaves your wallet. Okay. Although you're stakey, you only delegate the voting power. So your coins are still in the same place. They don't go anywhere. You don't lock them anywhere. They're still there, and you can unstake them and sell them anytime you like. Okay. All right. Other questions, Duncan? Is this the same on Binance? You can do this from Binance, Abby. If you want.
I meant the staking on Binance is the same formula. It doesn't leave your coins, don't leave your wallet.
Absolutely not. Absolutely not. It's completely different. And this is the difference between using a centralized exchange or being your own boss, basically, or using a decentralized system. Because in cryptocurrency, obviously the coins always live on the blockchain. Okay, but the big difference is when you use a centralized exchange, then you give them to the centralized exchange to look after. Okay, it's like just as if you have a wad of cash, and you're saying to whatever, to a financial organization, I'll give you this lot of cash, and then you open an account on your company, and I've got that right to that money, but the money is not in your hands anymore. So there is that risk involved that if something happens to that particular institution, you might lose the cash that you've given to them. It's the same thing with crypto. When you use a centralized exchange, there is third-party risk, and you can't get away from that because there's somebody else that has control of the private keys, which is the exchange. So you don't have your private keys. You just have an entry on an account, like it could be a bank account, but there is no guarantee. There is no guarantee whatsoever. Okay, so there is that risk. If you do the things from your own wallet, then you have control of your private keys. So nobody can do anything to that against your will, unless we're talking about hacking and other things. But Binance or Kraken or any of the other central exchanges are private companies. So private companies can go bust. And if they go bust, then you just are a creditor, like there are any other creditors. You are put in a pot with all the other creditors, and you share, if there is any money left, you share whatever is left. So that's the danger of dealing with centralized exchanges. Okay, although talking about Binance, you're talking about Coinbase, you're talking about Kraken. These are very reputable companies and they're very big. So it's unlikely they will fail anytime soon, but there's always that risk. But it's a risk normally that many people are happy to take because it's easier. This the same thing that we were talking about before with Facebook or Google or anything else. There is a price to pay for these things. To having an easy life, there's always a price to pay. Okay.
Luca,
Yeah.
I just want to clarify for the same query which I've asked earlier on about the Daedalus wallet.
Yeah.
Once you transfer from my exchange, either from the Coinbase or Binance to the Daedalus wallet, and from the Daedalus wallet, I wanted to do the stake pool. For the stake pool, different stake pool, you need to put like, if say for example, you have got the 1,000 ADA and your daedalus, but you wanted to put in 100 to the mill, 100 to fluid kind of thing. So for that, do I need to make like a separate small wallet to send the ADA to
No.
those? No?
No, you don't.
Okay.
When you're doing the delegating, you get to a
Mhm.
point where you say how many coins you want to delegate, and so you then you put 100 ADA, 200 ADA, 300, whatever it is. So you always have that, and so the rest of it is still in your wallet, and you can delegate to something else.
All right. Thank you.
Okay. Duncan, do you want to ask one of your questions? If I mean, you're welcome, guys, to ask questions if you have any. I don't see any here in the chat room. So
Yeah, not
please.
really. I didn't mean it like that. I meant that I'm always available to make up questions if nobody's got any. But there's usually about 14, 15 people here. So and I get quite a few questions by email and through the week. So I think what it is, Luke, people want you to continue talking with information rather than taking up the time with questions. So I'm going to pass it back to you, mate, and say, well, you've probably got something that you'd like to bring our attention to for 5 or 10 minutes. There's more been going on. I know you don't like to take the time with the news, but personally, I have to admit, as much as I listen, when things do start to take a turn, and I start seeing zeros wipes off my accounts, then I do get into a little bit of panic mode, and I've learned to hold tight. But maybe you'd like to sort of give us some reassurance on that level.
Yeah, I mean, it's something. Obviously, it really depends on everybody's attitude towards their funds, and that's why I always say it's important that when you first get involved in crypto, almost like the people that generally talk to say, look, just assume that anything you put in this account, you're going to lose. Okay, and as long as you're okay with that, as long as obviously nobody wants to lose money. Okay, I'm not saying, okay, if the worst happened and you were to lose all that money, how would you feel? I mean, would it ruin your life or not? Because if it does, if the answer is yes, it will ruin my life, then you shouldn't even start. Okay, because it is a risky investment and anything can happen. Okay, so if you start saying, okay, I have put money in there that I'm not saying I don't need, but in the sense that I could happily lose without changing my life, without ruining my life, then you can start thinking, okay, how do I, what do I do with it now? Because at least you're not, I want to say, emotionally that involved. That any small change can affect you emotionally, and then change almost like capacity. When we are that emotionally involved, then our mental capacity diminishes, and we take the wrong decisions because we, as you say, Duncan, we panic. We do a decision based on panic rather than on data. And if you're in a situation where you are a little bit stretched, thinking actually this is more important than I would like to admit, then it is a good idea to start taking to start skimming a bit of cream from the top. So obviously there is a lot of upside for the for the whole market to go, a lot of room to go. But at the same time, if you know that this is a lot of money for you, for example, start taking some off, take some profits. Like I'm looking at things, I've together to from my group every now and then when things are growing, I do tell, look, take some money here, take some money there. But generally, I haven't really given too many tips at the moment, simply because I don't think it's time to sell yet. Nowhere near that point. And although some of the things have gone up dramatically, like for example, one of our selection, the Sandbox, for example, is a metaverse coin. Is gone up, this past month, by about 4 times. Still not selling, simply because it's got such a strong narrative at the moment, that we are looking to get a lot more. But at the same time, you're thinking, okay, I've got something that was worth 80 cents last month, and now it's worth $4. Okay, and it is, I maybe have put whatever $500 in it, and now it's worth 2,000. Well, maybe take your $500 out and taking, okay, take 600 out. So not only you taking initial money, but you make a profit of 20%. And now everything that you got left on there, it's kind of like play money. And that takes your emotions away from it, because now you know that, because nobody likes losing. You know, even if it's like $10 that you invested, if you lose it, you get really seriously pissed off. Okay, and I do as well. Okay, I'm no different from anybody else. But if you do that, if you take a little bit of profit, when it's starting to be big for you, and that number is different from all of us, then it calms you down straight away. Okay, because you know that whatever happens, you're a winner. Okay, and it means a lot mentally. It means a lot. So you know what that number is when you should start taking profits is different, and I can't really tell you, you know, what that number should be, because that number for me would be different from your number, and it would be different from somebody else's number. So you have to make that decision when you start. You know, this is generally, I'm not just talking about crypto, but if you're buying something as an investment, the moment that you buy, you should always say, okay, if somebody came tomorrow and said, I want to buy that thing that you bought, whether it's a property, whether it's a crypto, whether it's a shares. If I want to buy it from you, would you sell it? And what price would you sell it at? Because you need to, at the moment that you buy, you got to be able to answer that question. Because it might happen. It might happen. You know, unless you have that goal written, then it would always be paper money. And you will see it go up and you will see it go down, and you say, oh, Griff, I'm rich now. And then 2 months later, you say, oh, I'm poor now because my investment now has lost 90% of what it was worth a month ago. So this is what I would, you know, when I was doing, there was a time when I was trading quite seriously, you know, and one of the first things was something nobody likes to do is writing down, sitting down, spend half a day or a day or even longer sometimes writing down your trading plan. Okay, so write down what the rules are. When will you buy? When will you sell? You know, what are the conditions? What are the triggers? And this is, it is something that you can make out for yourself. You can write for yourself, and it is really, really time well spent. Time spent away from the charts. Start spending with yourself and a piece of paper in front of you, saying, whenever that happens, this is the action I will take. Whenever that action, this is the action I will take. And it's very important. And again, you know, this, I can give you some, you know, tips on how to do that, but at the end of the day, you have to write the rules yourselves, because they will apply to your funds, to your finances. You know, again, you need to write this yourself, but it is very important that you do it at the beginning, and that you have an idea of why you're doing this and what would you like to get at the end of it. You know, obviously we can't kind of like read the future, but we can think about, you know, I always think about in terms of 3 targets. What's target 1, what's target 2, and what's target 3? And some of these may be very well defined, and some of them may be not well defined. For me, generally target 1 is getting to break-even point. Okay, so you know that if you got it right, you invested in that project, you got to a point where you think, well, I know I can't lose anymore. Okay, so that's target 1. Target 2 is when you take a big chunk of your gains. You're thinking that is reachable, that is possible that we get to the point, more probable than not, probably. And at that point, I'm going to take some money out, because it's going to represent a really good return for the money that I put in. And generally for me, target 3, this depends on the project, but often for me, target 3 is shooting for the stars, because you never know when you buy something. You never know when you actually hit a star, a project that can grow 100, 200, 500 times. And there are projects that do that. Okay, so I always wanted to keep some going, in case you do have the one that you know, that goes and never stops, never looks back. You know, so this is you know, our January plan. My investments. especially cryptos. But again, I don't want to quote any numbers because I don't really want to influence you in saying when you should you should take profit or when you should keep your money. Okay, Tim, please explain the process of borrowing against profits instead of selling and incurring tax, and how to pay back the loans with profits. This really depends on the protocol that you are using. Okay, because there are so many different ones now. But generally there are some protocols where literally you never pay back your loan. Okay, so because crypto loans, what you do is you have to provide a certain collateral. Okay, and you're allowed to borrow a certain percentage of that collateral. So generally, it can be 50% or less on generally what you're allowed to borrow. Okay, some projects invest your collateral in DeFi, and then basically with the proceeds of they get from your collateral, they pay back your outstanding balance. Okay, and when you say how do you pay back the interest, it depends. Some projects they have no interest. There are some where you can buy as long as your collateral is kept at a certain level, that you don't have to pay back any interest. Okay, so what you do, obviously, you don't pay tax on a loan, but obviously if that loan then generates income for you, for example, you put in a bank and you get paid interest, then obviously you would have to pay tax on that interest. But on the loan itself, which is a way of, we talk about this because it's a way of liquidizing your profits without having to pay tax, because you take a loan out, you haven't sold anything, you still got your coins. So you don't have any capital gains. But at the same time, you can use the money that you generated, because there are people that maybe have invested when, I don't know, Bitcoin was $3,000 and now is worth 55. So they got, for each Bitcoin that they bought, now they got over $50,000 of profit, but they don't want to touch it because they will have to pay so much in tax, depending on whatever country they're in. Okay, but they can take a 20% loan out of that coin, and for each Bitcoin, then they can take $10,000 that they can spend as they wish, for example. And in a year's, 2 years' time, maybe that a Bitcoin may be worth, I don't know, 100,000. So even those 10,000 that they borrowed, I mean, if they wanted to, they can sell a little portion of that Bitcoin and pay the loan back, or just carry on with the with the loan, either paying a little interest or using one of the protocols where you don't pay any interest and you just carry on with the thing, carry on with having the loan on your books, and eventually when you decide to sell it, you pay back the loan. So is that attractive to any of you? Because nobody likes to pay tax. Nobody likes to pay tax. Okay, is that clear, Tim? Well done, Duncan. Yeah, you still got the touch. Abby, yes, if you I can show that when we have a call on Monday. I can show you how to do that on Daedalus. It's not a problem.
Great stuff. I'm going to have to love you and leave you. I have another call to jump straight on. So thanks everybody as ever, and thank you, Luca. And I'll see you all soon. I'll see you in a bit.
Okay, no problem. Thank you, Duncan. I'll speak to you later. Okay.
Luca, another question: how to see on Binance how much you paid for the coins?
I'm not logged into Binance, but if you go onto the what's it called? I can't see right now. If you go at the top, the tabs that you have on the top right hand side, you can see the transactions. You go into the transaction history, and then you put the date of the transactions that you're looking at, and you'll be able to see it on there. You can download your transactions if you want in a kind of like a CSV file.
Okay, great. Thank you.
Which you might need to do when you need to fill in your tax return.
Okay, thank you.
And I mean, if you remind me on Monday evening, I'll show you all as well where to get your historical transactions on Binance as well. Just make a note of it. Because sometimes these things, these apps are not that sometimes are not that easy to use, unfortunately. They are easy enough once you know them, but the finding information sometimes is
so many
challenging.
tabs.
Yeah, I know. But the first port of call, when you have a problem like this, you just Google it. Just think, how do I do this on Binance? There's lots of info online. So if you check, how do I get my transaction history on Binance? I'm sure that you get kind of like tens of pages that will with instructions on how to do it.
Great, thank you.
Okay. Hi Mila, you just come to pretty much at the end of the room. We're just about to finish. But if you have any questions, I might be very happy to answer it for you.
I'm sorry, I was just not able to join earlier because of other priorities, but
Sure.
Still didn't want to miss it and thought I'd jump in. No, I just wanted to. I'm very curious about your view on what's going on currently. So, in general.
Yeah.
So.
Yeah, we talked a lot at the beginning. Maybe you want to watch I mean, I put the recording on the in the group.
In the group,
as soon as we finished, and it's ready on YouTube. But yeah, today we were talking really about the battle for the future of money. So big discussion. I think it's important. And what's going on, especially in the US at the moment, is very important. I think the US is struggling as well on different things because they want to control this thing. But at the same time, they know that they don't want to lose the competitive edge, and especially they don't want to lose the capacity of denominating everything in dollars, because that gives them a big advantage, especially in terms of dollar strength. So they are trying to balance this thing. They're not doing a very good job at the moment, but at least now they are trying. They're not just bashing crypto as they were doing a couple of months ago. There are some voices now in support, and there is agreement on both parts as well, from both Democrats and Republicans in support of crypto. So we might come to a to kind of like a compromise that is more acceptable as well to the world of crypto. And I'm sure that it's something that in the next elections, I'm sure that a lot of crypto funds will be mobilized to support crypto favorable candidates as well. Yeah, there's been a lot of talk of this, in the crypto sphere, not just from I know that Charles Hoskinson was talking about it. The founder of Coinbase was talking about it. The founder of Messari was talking about it. So they're taking notice now and saying, actually, they got a lot of funds behind them now, and they're going to make them count. So I think things are moving and changing quite rapidly, even because the politicians go a lot by polls. Take a poll about this, a poll about that, and they're seeing that the public opinion now wants to use cryptocurrency. Okay, so yeah, I think something will happen. Stan, so you got your hand raised. Did you want to ask anything?
Yeah, Luca, just on Tim's point, I think Coinbase is offering up to $1 million lending facility.
Mm-hmm.
So that's Coinbase, but there's also other organizations like Celsius, who else in particular I think is really, you know, a reputable organization to borrow? I mean, let's say you had $1 million worth of Bitcoin, right? And,
Mhm.
and, you know, you don't want to sell it because you know you're going to crystallize a capital gain. So I think what Tim's saying is let's borrow against it to get some cash, to get some leverage without having a sale. Is what organization would you be sort of looking at?
To be honest, everybody's doing it. Everybody's doing it now. That's a difficult thing to say, because you know it's going against into trusting. You know, who do you trust? Do you trust you know, Coinbase? Do you trust the code on a decentralized app? You know, and that's kind of a decision that you're going to have to make. I'm personally, I would want to keep things decentralized as much as possible. You know, the innovation is coming more on the decentralized side than it is from centralized organization. I mean, you use Coinbase, you use Celsius or Nexus or whatever, there is a price to pay. So obviously, you know, you can do the same thing in a decentralized way. Maybe you pay 0.1%, you do it on Celsius, you pay 6% or something like that. So yeah, it's up to you. It's up to you what you want to do. I mean, in some of these organizations, make it easy for you. They say, oh, we guarantee we do this, we do that, you know, we'll keep it safe for you. And for that reason, you know, you pay a price, or you can educate yourself and do it yourself and pay a lot less. That's the thing. But then there is that risk always of the protocols, and even decentralized protocols. There are, you know, ones that are more solid, more established, you know, and just doing a little bit of reading about it will go a long way. You find which ones are the ones that are supported, and whether they got more funds locked and invested in them, and you know, and it depends on what. At the same time, you know, whenever you are, you know, lending or borrowing, you really have to look at your position as well. You know, what do you want to do with these funds? So is it a long-term thing? Is it a short-term thing? You know, what's the risk involved? Because whenever you are asked to provide a collateral, there is also a risk of that collateral not being enough for the funds that you're taking out. So, and this is in particular relevant if, you know, let's say that you wanted to buy a house with some of the profits that you made, you know, by taking a loan. And let's say you take a 50% loan. What about if there is a 50% drop in the price of Bitcoin, for example? Then you might get what is called a liquidation call. What would be in a traditional exchange, you know, when you're trading, would be a margin call. You know, in this case, would be a liquidation call. We're going to say, well, actually, your collateral is not enough, and then automatically the code itself will just liquidate the position, you know, at a certain cost as well. So, you know, there are all the usual things apply. So you have to consider, you know, what you are borrowing and what you are lending against what you want to do, what your other plans are, and see what kind of like what flexibility you have left. So if Bitcoin was to go down 60-70%, could you provide more collateral, or would you be happy to be liquidated? That's a you know, again, it's something that you need to judge. You got to understand about everything you do, you know, what are the advantages, but also what are the risks, and you got to weigh one against the other. Okay, so it is good when things are going well. On a bear market is worrying, because you see, you know, your collateral ratio, you know, going down, and you see your liquidation event coming closer and closer. Obviously, that's a worry if you are investing the funds that you borrowed in a way that is not liquid. and you don't have any other funds that you can provide, then it's a worry. I mean, obviously you still have the money that you borrowed. Nobody can take that from you, but the rest, I mean, your collateral can just disappear. Okay. So that was what I was talking about. Alice, welcome as well to the call. Okay, just to I don't know if you realize, but this call goes on every Friday between 8 and 9. So we are really now coming to towards the end of the call. If you have a question, I'll be happy to take it. Or you can watch the recording as well when it's posted on the circle after the call. So do you have any questions for me or no? Oh no. Okay. Fine. So any last question? I'll take one last one before we close the call. Anybody wants to go? No, you're all very satisfied of I have bamboozled you completely today. Is that the one or the other? Okay, no worries. So yes, we'll close the call here. For those of you that are part of my mentorship, then I will see you all on Monday evening, as normal, and at least in the UK, and whatever time that is for you, where you are, and otherwise I'll see you again here next week at the same time, 8 till 9 o'clock in the UK. Okay. So good night. Say good night. Goodbye, everybody.